Warrick is a senior fellow at the Atlantic Council. He joins us live from Washington, D.C. for more on this. Thomas, your initial reaction, I suppose, to the markets and it sounds churlish to say, doesn't it? Because the stocks have been rebounding up, down, left, right, all over the place. I suppose the obvious thing to observe from this is just the uncertainty and the volatility inherent in all of this, and how markets and how countries and how companies are having to figure out what Trump is going to do next.
Absolutely. And before we start thinking of this as a really good day, I have to point out that the major world stock market indexes are essentially back to where they were 1 week ago, which was already after there had been a pretty significant drop off of the highs that the markets were in before President Trump took office. The other thing that needs to be emphasized here is exactly why this turnaround occurred. The Treasury Secretary had to go to President Trump early Wednesday morning and let him know that bond traders had started selling U.S. government bonds. This would make U.S. interest rates have to go up, and the consequence of that would be devastating to President Trump's economic hopes. It would almost certainly produce a major recession. It would certainly make it harder for him to get the tax cuts that he wants to keep in place from his first term. And so they were looking at an economic meltdown if they didn't change course. And I'm sure the Treasury Secretary was very forceful in making this clear to President Trump. And the result was the 90-day pause, which, as you say, leaves nobody satisfied. None of the benefits are going to occur. The losses have already occurred. It's not clear they're coming back. And Trump's hope that somehow businesses will invest more in the United States are just in as much chaos as the markets have been, because no one is going to invest billions of dollars in the United States until there's greater certainty over the economic course that the U.S. government wants to take.
Yeah, Thomas, I think it's just worth reminding viewers that, of course, this so-called pause does still leave 10% base rates, or what the Trump administration are calling this base rate of 10%, as an additional tariff on all foreign imports from just about every country that he mentioned last week. Nonetheless, the Trump administration is likely to point to this 75 or so countries that are now approaching the White House for some sort of trade negotiation as an indication that even though they've had to roll back some of the more punitive tariffs, they are still compelling some of these countries to try and negotiate better deals that could ultimately favor the U.S. and potentially improve the economy as well.
Well, and this does give President Trump the hope that he will get small victories, that he will then say, look at how successful this was. But the U.S. economy has already slowed down. Many plans for investment entirely within the United States have been put on hold. And so people will remember this. But if he tries to renew these tariffs, after the 90-day period, we're probably looking at something very similar happening again. And so this is undoubtedly and ironically going to weaken Trump's hand as he tries to negotiate better trade deals.
Thomas, I wonder if it's worth remembering, too, that for a lot of investors, and certainly people that are investing in the stock market and the bond market, too, they are trying to look ahead, aren't they? They are trying to sort of predict both the near term and the medium term when it comes to making some of the sorts of decisions that are resulting in these large fluctuations and the volatility that we're seeing. In terms of the layperson, though, in terms of the companies, the SMEs, the small and medium-sized enterprises that are trying to run their businesses, that are trying to plan taxes and investments over a longer-term period, how on earth do you go about trying to make sense of this big swing and complete volte-face in some ways that we have seen not just over the last week, but really over the last couple of weeks and months?
Well, there have been several Nobel Prizes in economics handed out over the last 2 decades to people who have described exactly what I'm going to say will happen next. Businesses are going to become very cautious. They will not take risks. They will be very cautious about hiring new employees. They will be very cautious about expanding new product lines, about making significant investments. And even this kind of a slowdown is enough to tip some economies into recession, both the United States and other countries. And so you're going to see a contraction as everyone becomes fearful that they just don't know what will happen next. People will try to hold on to what they have, and all of the optimism and all of the growth that has characterized the United States economy, Europe, Turkey, other emerging markets since we emerged from the pandemic, it's all gone. And right now, nobody can be sure whether any new investments will pay off. This in itself could tip us into a recession.
Thomas, we mentioned China. China's Commerce Ministry has said that it is trying to deepen its relationship with other partners. It's specifically name-checked the European Union and talked about prices over electric cars there. It's talked about Southeast Asian trading partners as well. This 125% levy that now exists on Chinese imports into the United States, and this seeming bifurcation between the United States and China and countries trying to figure out those relationships as well. Just quickly, can you explain what the sort of implications are to that and where you might see this escalation between both Beijing and Washington?
Well, it's going to be tough negotiating, that's very clear. But you're also going to see tariff evasion in a massive sense. Companies are going to try to game the system. Things that you would think were made in China are all of a sudden now going to be made in other countries, Vietnam, Malaysia, Indonesia, you name it. This is going to produce tax evasion on a massive, massive scale. That'll make some lawyers and accountants very rich in East Asia. The games that are going to be played over this are just mind-boggling.
Thomas, thank you so much for that. That's Thomas Warrick, who is a senior fellow at the Atlantic Council in Washington, D.C.